Billions of dollars vanished in a single chaotic year. Uber, a company once valued at nearly $70 billion, faced an unprecedented downturn in 2017 after years of meteoric growth. This ride-sharing giant had expanded into over 600 cities across more than 70 countries, boasting a network of over 3 million active drivers and serving 100 million riders each month globally. Its innovative model revolutionized transport, attracting billions in investment funding and creating an economic phenomenon that seemed unstoppable. However, a series of internal and external storms converged, turning its once invincible image into one of controversy and instability. The year 2017 became a period of intense scrutiny, with numerous allegations surfacing regarding its workplace culture, including reports of widespread harassment and discrimination. These internal issues were compounded by a slew of high-profile legal battles, regulatory challenges, and fierce competition from rival firms in various markets. The company reported staggering losses exceeding $4.5 billion that year, painting a grim financial picture. Key leadership figures, including its co-founder and chief executive officer, departed under immense pressure, marking a dramatic shift at the very top. Over 20 senior executives left their posts over a span of several months, signaling a mass exodus of talent and institutional knowledge. A major data breach affecting 57 million users and drivers was also disclosed, adding another layer to the mounting public relations crisis. This combination of events led to a significant erosion of investor confidence and a re-evaluation of its core operational ethics. The board of directors took drastic steps, implementing a massive governance overhaul and bringing in new leadership to steer the company towards a more sustainable and ethical future. This period, often referred to as a Great Reset, involved overhauling company policies, establishing a new cultural framework, and addressing past transgressions head-on. The goal was to rebuild trust with its vast user-based driver community and the regulatory bodies worldwide. New safety features and enhanced driver support systems were introduced alongside stricter internal reporting mechanisms to prevent future abuses. Despite the immense challenges and financial setbacks amounting to billions of dollars in lost market value, the company ultimately managed to navigate this tumultuous period by focusing on long-term stability and responsible growth, aiming for a public listing in future years and regaining its footing as a dominant force in urban mobility. A shocking $82 billion valuation fell short of expectations on day one. Uber, the ride-sharing giant, began its recovery after the 2017 crisis, where billions vanished. New leadership under Dara Khosrowshahi took helm late 2017, rebuilding trust, redefining future. This meant new safety features for millions of drivers and riders. By 2018, the company reported 91 million monthly active platform consumers, a clear sign of user loyalty. Gross bookings hit $49.8 billion that year, showing strong operational rebound. The company geared up for its initial public offering in May 2019. Pre-IPO projections soared to $120 billion, but actual listing valued Uber closer to $82 billion, with shares opening at $45. First day trading was disappointing. Stock dropped over 10%. Raising $5 billion through IPO market reaction highlighted challenges. Uber continued aggressive global expansion, growing over 900 cities, 72 countries by 2019. Its reach touched hundreds of millions of people. Focus shifted to sustainable growth, ethical operations, balancing innovation, responsibility. Quarterly revenue late 2019 hit $3.8 billion, indicating significant scale. Profitability remained elusive. Net losses still in billions, demonstrating complex path forward. Resilience to attract serve millions of riders each month. After immense setbacks, solidified its position as dominant force urban mobility globally. A new chapter from the ashes of its 2017 turmoil. Billions more dollars evaporated into thin air. Uber, despite its massive reach, faced ongoing financial headwinds, even after its 2019 initial public offering. The company, which connected millions of riders with millions of drivers across hundreds of cities in dozens of countries, worked tirelessly to redefine its path. In 2019 alone, net losses exceeded $8.5 billion, a stark reminder that scale did not automatically equal profit. Leadership under Dara Khosrowshahi pushed for a great reset, prioritizing sustainable growth over aggressive expansion at any cost. This meant a renewed focus on core markets and divesting from less profitable ventures across multiple continents, impacting hundreds of millions of dollars. The food delivery segment, Uber Eats, became a major strategic pillar, with gross bookings surging from $8 billion in 2018 to over $25 billion by 2020. This rapid growth helped balance the challenging ride-sharing unit, which still saw intense competition and regulatory pressures from hundreds of local governments. The company aims to achieve adjusted EBITDA profitability by 2021, a crucial goal to calm investor concerns after its initial public offering struggles. Its global footprint remained vast, serving over 111 million monthly active platform consumers by late 2020, a significant jump from 91 million 2 years prior, representing millions of new users. Uber also invested heavily in new technologies like autonomous driving through partnerships and internal development, committing hundreds of millions of dollars to mobility, exploring self-driving cars and drone delivery. By 2021, the company was present in over 10,000 cities across more than 70 countries, demonstrating its enduring global presence and reaching billions of potential customers. Operational efficiency became paramount, reducing costs across its vast network of over 5 million drivers, streamlining its technology and logistics platforms. New safety protocols, including in-app emergency buttons, real-time trip tracking, and driver verification systems, were rolled out globally, impacting hundreds of millions of rides each month, enhancing trust and security for millions of users. Despite these efforts, the path to consistent profitability remained complex, with constant investments required for technology innovation and market penetration. Revenues continued to grow, reaching over $17.5 billion in 2021, driven by strong performance in both mobility and delivery segments, marking substantial revenue increases year over year. However, significant investments in expansion technology and marketing kept net profits elusive, requiring billions of dollars in continuous funding. The journey involved continuously adapting to local regulations in countless jurisdictions and managing the evolving gig economy workforce of millions. Uber's share price fluctuated significantly, reflecting investor confidence in its long-term vision, balanced against persistent short-term losses and market volatility. The company aimed to be a holistic mobility platform, integrating ride-sharing, food delivery, freight services, and even micro-mobility options like electric bikes and scooters. This grand vision required careful resource allocation across multiple product lines, each with its own set of challenges and opportunities across a global landscape. Thousands of new hires joined the team globally, enhancing engineering, product development, and operational support, adding to a workforce of tens of thousands. The company's continued existence as a dominant force after near collapse demonstrated remarkable resilience in the face of intense market competition. Its impact on urban transportation and consumer habits was undeniable, shaping how millions of people moved and received goods every single day, a testimony to its foundational strength and innovative spirit, moving forward from crisis.